Hello and welcome to Capital Market Live on Channels Television. I'm Will Ibang, and as always, let's check in on the markets. We begin with Europe, where markets closed lower on Friday with traders digesting fresh economic data from the U.S. France's CAC 40 slipped 0.23%, and the German DAX closed 0.17%. The UK's FTSE 100 was closed on Friday for the Queen's Platinum Jubilee celebrations. Now, new data out Friday showed the US economy added 390,000 jobs in May, better than expected despite fears of an economic slowdown and with a roaring pace of inflation. Over to Asia, where shares rose on Friday as several major regional markets were closed for a holiday and investors looked ahead to the release of U.S. jobs data for May. Japanese stocks led gains among the region's major markets, with the Nikkei 225 gaining 1.27% on the day as shares of fast retailing soared 5.86%. Markets in mainland China, Hong Kong and Taiwan were closed on Friday for a holiday. Now to the U.S., where stocks slid on Friday to close a week lower as investors digested a stronger than expected jobs report and its implication for monetary policy going forward. The Dow Jones Industrial Average fell over 1%. The S&P 500 slipped 1.6% to 4,108.54 points, while the tech-heavy Nasdaq fell nearly 2.5%. All three indexes finished negative on the holiday-shortened week. The S&P 500 fell 1.2% this week. The Dow and the Nasdaq each lost nearly 1%. Investors analyzed the latest jobs report showing U.S. hiring remained elevated in May. Now back home at the domestic equities market, stocks closed in the bear territory following pressure from profit-taking activities during the week. The local bourse recorded 4 days of losses in the 5 trading sessions of the week. Now the all-share index shed 2.18%, week on week to close at 52,908.24 points. Profit-taking witnessed in shares of Okomu Oil, Presco, Nigerian Breweries, Lafarge and MTN Nigeria drove the weekly loss. The year-to-date return settled lower at 23.9%, still in positive territory. And now, following a block divestment in Union Bank during the week, the total volume traded increased significantly to 28.74 billion compared to last week, where we had 1.84 billion units of shares traded, valued at 209.06 billion naira. Sectoral performance was broadly negative. Key indexes were in the red, reflecting the overall negative sentiment in the market. Nigerian Aviation Handling Company, that's NACO, topped the gainers chart for the week, while Cornwell led the decliners. The trio of Union Bank, Transnational Corporation PLC and FBN Holdings contributed 96.89% and 92.55% to the total volume and value traded in the week. Similarly, the NASD OTC Securities Exchange closed the week negative. The NASD Securities Index fell by more than 5%. The exchange lost about 56 billion naira in value. However, volume rose by about 27% to 10.25 million units of shares traded, while value traded for the week fell by 7.4% to 91.52 million naira. Food Concept was the sole gainer for the week. Niger Delta Exploration and Production topped the losers chart. Meanwhile, Food Concepts and Union Bank Property PLC were among top stocks traded by volume for the week. Now joining me to review the activities in the market is Mr. Ayodeji Ajilore, investment research analyst at ARM Securities Limited. Good to speak to you, Ayodeji.
It's a pleasure to always be here.
Ayodeji, the market has been going flip-flop, flip-flop. We don't know what direction it's going, but what is driving the negative sentiments in the market?
Pretty much. Good evening. Thank you for having me once again. Pretty much like you have said earlier, right? We have seen a rally in the market so far this year. I mean, so that has even surpassed our expectation in the real sense. But intermittently, we are expected to see a break. I mean, the market taking a breather, much like a situation whereby momentum is settling, and then perhaps there's a little bit of retracement along the line to consolidate position, perhaps before another lift is seen. So in the real sense, that is pretty much what is happening, and we can attribute it to profit taking because we are seeing so many of these stocks gain significantly since the beginning of the year. So what is now turning out is perhaps investors who have gained significantly enough in line with perhaps the investment objective they set at the beginning of the year, exiting their position and perhaps looking for safety. We all know that the equities market could as well be quite volatile. So overall, what we have seen basically within that space is more or less like investors coming, taking profit, and then perhaps settling for less risky asset, pending when the coast is clear, or perhaps for another revisit of the space. And then, of course, we saw recently also that the Monetary Policy Committee in Nigeria deciding to hike the rates by about 150 basis points. The kind of tone that sets in the market, and most especially within the capital market in Nigeria or anywhere else, as we've seen over time or observed over time, is the fact that investors start to demand more, particularly for fixed income instruments. And then we saw at the primary market auction for treasury bills just last week, we saw particularly how the yield, the marginal rate, let me say the stop rate now, on the 364-day instruments suddenly just spiked upward. So it pretty much just aligns with our thought. And then when yields are going up like that, some investors might just think, okay, we've made some significant profit. We've made some profit, even when it's not significant, in the equity space. We can as well exit this position, lock in for the next 364 days, and then perhaps that will give us some level of safety net.
So you think that there probably will not be any bargain hunting, because now that stocks, especially big names, are dropping lower, this is right, I think, the right opportunity for investors to come in and buy at a very low rate. So don't you think that's going to happen and probably boost the market back up? Yeah,
when we look at the market, actually, we probably are looking at resistance. The base at which the best pricing at which investors can re-enter. And then we look at support, the base at which investors can enter. And then we look at the resistance, the topmost performance, where it always gets to, and then it bounces back. But in this case, right, what we've seen is that for some of these tickers, particularly, they are setting a new high. For some of them, they are regaining the highs of the past. So what we're seeing investors doing within that space now is pretty much like looking for the right timing. Is it the right timing now? I do not think so. Particularly in instances like this, when we see investors coming back to the market, it's particularly around perhaps when it is due, it's almost due for Q2's result to be released. On another hand, we also have some companies whose full year 2022 will be in June, and then the result will be released somewhere in July, and then perhaps maybe in August, depending on how the companies decide to release their results. So in the real sense, that low, that support is what everyone is looking for, and then that's where the job of investment advisors come in anyways. But basically, I do not think those stocks are particularly there now.
So we're looking at stocks that probably would do it. The banking stocks have not really been performing really well, but GTCO just launched a digital payment solution. Do you think, will this drive investors' appetite for that stock and probably boost, renewed interest, buy interest rather?
Yeah, as much as we as analysts in the industry try as much as possible not to jump the gun, because basically we need information to work with. We also are trying as much as possible to get in ahead of the curve, pending, in the sense of using information in a more faster way. But for this case, in the case of a BariPay, which is a payment processing company that GT is launching, and which they've gotten approval for, what we see is it's still early days to call, but in the real sense, it's another income stream. Now, putting it side by side with existing payment processing companies within the Nigerian context, although those ones are not listed, we think particularly there's a lot of potential for it, especially if it can find its way into the market using penetrative pricing, in the sense more or less like trying to do a pricing battle with existing players. We think that way it can quickly catch market share. And another thing for them is the fact that they have the GT brand to leverage, which in the real sense goes a long way. So overall, it's another income stream, but we are looking for guidance. We want to see how it will impact, but pending that time, we think it's still early days to call.
We'll see how that goes. But during the week as well, we saw Union Bank dissolving their board and having new management come on board. But, since following the takeover by Titan Trust Bank, but investors and some minority shareholders are having concerns, regarding their investment in the company, and the concern that Titan Bank, which is just 2 years in the market or in the country, is able to take over the management and probably still hold that company, which is over like 100 years old. Do you think investors or shareholders' investments are safe at the moment?
Basically, we have a lot of regulatory organizations within the Nigerian space. And the kind of function they perform within that space is to ensure that investors' funds are indeed safe, depositors' funds are also safe, and then as much as possible also, in the case of investments, buying over companies like we're currently seeing, SEC is also there to regulate. So overall, I particularly think there is no cause for concern looking at the current climate and the current information obtainable from within that space. And then in addition, if the concern is now about perhaps maybe they are going to buy us over, I think one particular thing is we need to understand that as it is currently, the Security and Exchange Commission's position allows them to buy out minority shareholders as it is. But from where we stand, we particularly think you will also notice that there was some level of resignation, retirement of board members along the line. We think for anyone, particularly for Titan Trust, to come into the market and buy Union Bank equities at the level at which they did, we think it actually means they have found a way to unlock value within that space. And one thing is investors don't just throw money around. They throw money where they think the risk is lower and then the possibility of an upturn is good. Some banks within the tier that UBN belongs have done it. They've shown over time that things can be changed if you adopt the proper procedures, let me say measures. And then, of course, I would expect ordinarily, or let me say we would expect that is going to be the case with UBN. Perhaps I should say that the investors out there should not be that worried. They should rather look to see what is going to be, because I think the company is particularly taking a different turn now.
So are they going to still be listed as Union Bank or Titan Trust? Are we seeing a change in total rebranding of that company? Is there going to be a total rebranding?
A lot of things are still up in the air. Are we going to have Union Bank become Titan Trust? Are we going to have Union Bank delisted? But until management provides guidance, we are not in the place to actually just, we can just insinuate, but we are not in the place to talk in the affirmative, particularly about that kind of course of action.
Okay, so we also saw block trades take place in the stocks of FBN Holdings. What drove that? Because people are yet to understand it, but maybe you have some insights.
Yeah, pretty much. Yesterday, I think there was a conference call, particularly on the performance for full year 2021 and Q1 2022. And if there's something that stood out, it is the fact that First banks seem to have been improving. You know, they had some issues sometimes ago about their NPL amongst other things. And then as of the last result, I think the NPL was about 6.1%, right? Getting close to where it should be. And then looking at where they're coming from, I think investors are now getting to see like, okay, this is indeed serious, the direction, the trajectory they are taking. So it might just be the best way to run in ahead of the curve and perhaps take position. And then when you say about the block kind of investment we found, I think it's the aftermath of the conference call. Perhaps there's need, or perhaps there's opportunity for renewed optimism for investors now, and perhaps they're buying it.
Well, we just hope that that optimism stays, exactly, elevated. So now earnings are still trickling in. Last week, that's the Q1 2022 earnings. Full year reports are still coming in from companies. This week, Honeywell and Flour Mills published their reports, financial report. How would you rate their performance for the full year 2021-2022?
Within that space, it's more of a mixed feeling. You will see that for Flour Mills, for instance, they joined the league of companies with more than 1 trillion in revenue in full year 2022. And then, of course, we also saw growth for Honeywell. But one thing that actually impaired that kind of top-line surge that we saw is the rising cost. Their cost of input actually outpaced their revenue. So inadvertently, what that created is an environment whereby there's not enough gross profit to particularly cover overhead. Meanwhile, when you look at their OPEX, Flour Mills, for instance, you will see that it was just a marginal increase. Honeywell, it was a decrease there. So when such things happen normally, you would expect that performance will be amplified, but due to the cost issues, it wasn't the case. It's pretty much more of a mixed result. You see surge in top line, which is revenue, and then eventually you see the impact of cost coming in to impair that kind of performance, which is worrying. But what stood out is the fact that there is still the possibility of an adjustment in revenue, especially when it comes to pricing. There's still that possibility. But also, like I was saying earlier, we saw that OPEX didn't really increase, which is actually another positive. But overall, when we look at the performance, we saw that flour mills, for instance, grew bottom line, profit after tax, by about 8.9%. And then, of course, we saw the decline in Honeywell's performance. Now, the point is, what makes for the difference? Seeing that Honeywell actually posted reduced OPEX when you aggregate both all these overheads within that space. What makes for it is the fact that the volume level at which flour mills is playing is quite higher compared to, you can see the revenue, of course, that pays testament to that when you look at revenue of about 1.3 trillion thereabout, and then on the other hand, you're seeing just in billions, right? Not even up to $500 million, so to put, for Honeywell. So basically, that scale is particularly what helped flour mill scale to. And then seeing how flour mill is continuing to grow, is agro-allied business for one, we particularly think there's opportunity, right, to mitigate those cost concerns by just pushing volume within that space.
You talked about cost concerns. The cost of sales or cost of goods sold for flour mills was almost $1 trillion, well, if not $1 trillion naira as well. So is Honeywell's, flour mills still a good play for investors? Yeah,
I particularly think it's a good play, even despite the fact that we had that tepid growth in profit after tax. That profit is still the highest in 8 years. Right? So we were somewhere in 2017, 2016, 2018. And then, of course, we are here today, and it's a complete improvement from where we're coming from. So basically, I still think it's a very good place to play. And then also, when we talk about perhaps something being a good place to play, ticker being a good place to play, we also try to look at relative metrics, and then we look at it within the context of the industry within which they play. And then for us, we still think by implied pricing, right, flour mills could still do 2 times the current pricing is doing. And then from where we stand at ARM Securities, of course, we actually have a pricing of 41 naira target price for December 2022, towards December 2022 for flour mills. So I still think particularly that is a good stock to play in.
But if you look at their price to earnings ratio, you see that it's just 5.38 times. That's investors are paying that much. But compared to Honeywell, which is 22.19 times the amount they're paying, doesn't that send a message there?
Of course, it does send a message, but I won't use the price earnings now. I would rather use the EV to EBITDA, because considering that the most recent result most especially result in a loss for Honeywell, right, that might have amplified the reality within that space. So I would like to talk to EV to EBITDA. And when you look at it, you're looking at a flour mill that is doing about 3 times, right, is EBITDA in enterprise value. And then you see the likes of Honeywell still doing about 6.56 times. So basically, it means where flour mill stands now, it can still perhaps almost double its EV relative to its EBITDA.
Okay, so investors should not give up on flour mills. They should keep, staying, loyal to that stock. Do you see the stock price rising anytime soon?
Like I said earlier, we have a target price, and we are looking at 41 naira for flour mills. It's currently trading around 35 naira, 40 kobo thereabout, and we think it could still have such upside before December this year, and that's the essence of the target price.
Okay, so now we're just going to move a little bit and talk about investments. Talking about investments, there's still foreign investment, capital inflows that we're looking at in Nigeria. So what do you think about the latest Nigerian capital importation data that was released by the National Bureau of Statistics? We saw a year-to-year decline of about 17.5%. And Q1 was at 1.7. How much billion did we rake into the country? It is quite dismal. So how would you speak to that? What would you say about that?
Particularly, I see the capital importation data, and it helps me to gauge how foreign investors particularly feel about the Nigerian economy. Over time, we've had to write it in several reports. So I liked how that abysmal level of FDI, particularly, is an indication of not so good macroeconomic environment within the Nigerian space, so much that foreign investors are unwilling to tie down long-term capital within this space. Okay. But what we've seen that has actually shown some little bit of respite over time is the foreign portfolio investment, yes. Right? Yes, but in this case now, we are seeing a different ballgame entirely. The election is just around the corner. Investors are not willing to put their head in the game because they don't know what the outcome will look like. And the outcome, to some extent, right, even though a lot of people are more or less neutral about it, the outcome determines how investors think the market within the Nigerian space will go. So basically, what we're seeing with that data is the fact that investors do not have this optimism about the Nigerian market. And then on the other hand, also, when we look at the data a little bit further, we found that the origination, particularly for most of this flow, came from the United Kingdom. And then when we came down as well, because I like to trace this thing because it helps me to understand some things about the data as well. And then when I look at where these funds went to, they went to Lagos. Of course, when it's FPI, you expect most of it to come to Lagos. Okay. But the thing that particularly bothers me is the fact that the kind of investment flow that just single-handedly more like comes towards the south than it is the north or any other part of the country shows something. Right? FDI, not going to where we know normally that it goes to. We usually have the Peugeot automobile in Kaduna and the likes. So with the current trend, we have reasons to believe investors are not so optimistic. So
insecurity is a problem and it's something that we have to look into.
By implication.
Really. So IFDG, Auxiliary Investment Research Analyst, ARM Securities Limited, thank you so much for coming on the program and sharing your thoughts with us.
It's my pleasure. Thank you.
And that's it on Capital Markets. To join us same time next week, I'm Will Ibon. Thanks for watching.